River is leading another one. Last time was great, so here we go.
Appreciate it, Erica. I have been connecting this to some recent headlines. Let me show you why it matters. A family I worked with last year bought a $400,000 home, 0 down payment, no private mortgage insurance. Their monthly payment was lower than their neighbors who put 10% down on a conventional loan.
Think about that for a second. A mortgage product where putting nothing down actually gives you a better deal than someone who saved for years to make a down payment. That should not be real, but it is.
The bottom line is simple. The VA home loan is the single most powerful mortgage product available in the United States. Full stop.
This is VA Benefits 1.5. Today we are breaking down exactly how the VA home loan works, who qualifies, and why it saves veterans tens of thousands of dollars over the life of a mortgage.
But there is a catch most veterans do not see coming. It is called the funding fee, and how much you pay depends on details most loan officers never explain upfront. That is the part that costs people real money.
By the end of this episode, you will know exactly how to avoid the most expensive mistakes veterans make with their VA loan benefit.
Quick intros before we jump in.
Good to be in the co-host seat for a change. Let us have some fun with this.
Hey, I'm Michael. Honestly, I am hyped for this one.
Isabella here. Really glad to be digging into this with everyone.
Good to have everyone. Here we go.
Here is the first thing most people get wrong. The VA does not give you a loan. The VA does not write you a check. A private lender gives you the mortgage, and the VA guarantees a portion of it.
Think of the VA like a co-signer with extremely deep pockets. The bank is not taking the risk alone. The federal government is standing behind part of that loan, which is why lenders can offer terms this generous.
Strip it down to one sentence. The VA guarantees the loan, the lender funds it, and that guarantee is what unlocks 0 down payment and no PMI.
And this is where the certificate of eligibility comes in. Your COE is the document that proves to the lender that you have earned this benefit. Without it, the lender cannot verify your entitlement.
There are 3 ways to get your COE. The fastest is through a VA approved lender who can pull it electronically in seconds. You can also request one through va.gov or mail VA Form 26-1880.
The eligibility requirements depend on when you served. Wartime veterans need 90 continuous days of active duty. Peacetime service requires 181 days. National Guard and Reserve members need 6 years of service.
If you have a DD-214 and it shows an honorable or general discharge, you are almost certainly in the conversation. Start with your lender pulling the COE and go from there.
Now we get to the part that makes every mortgage broker jealous. Imagine walking into a car dealership and being told you can drive off the lot with $0 down, no extra insurance, and a lower interest rate than the person next to you. That is what the VA loan does for housing.
On a conventional loan, if you put less than 20% down, the lender requires private mortgage insurance, PMI. That protects the lender, not you, and it typically costs between 0.3% and 1.15% of your loan balance every year.
I have seen this play out dozens of times. On a $350,000 mortgage, PMI runs about $150 to $200 per month. Over 5 years, that is $9,000 to $12,000 the veteran never has to pay.
And the 0 down payment piece is just as big. A conventional loan asking for 5% down on that same $350,000 home means $17,500 out of pocket before you even move in.
Erica here. Michael, when you add the down payment savings and the PMI savings together, we are talking about a veteran keeping $30,000 or more over the first several years of ownership.
And stick around, because later in this video we are going to cover something most veterans have no idea about. You can use this benefit more than once. The VA loan is not a one-time deal.
This is where veterans get blindsided. I worked with a family that closed on their home and only discovered the funding fee when they saw their final loan balance was $8,000 higher than expected. Nobody explained it.
The VA funding fee is a one-time charge applied to your loan. For first-time users with zero down payment, it is 2.15% of the loan amount. On a $400,000 loan, that is $8,600.
Here are the tiers. Put 5% down, the fee drops to 1.5%. Put 10% down, it drops to 1.25%. Subsequent users with zero down pay 3.3%.
Michael here. That 3.3% for subsequent use is steep. On a $400,000 loan, that is $13,200. Isabella, is it factor analysis of information risk that veterans who have already used the benefit once get charged 50% more the second time?
It is the trade-off for a program with no PMI and no down payment requirement. The funding fee sustains the program, so it does not need taxpayer funding. And here is the critical part.
Several groups are completely exempt. If you receive VA disability compensation, you pay $0. Active duty Purple Heart recipients pay $0. Surviving spouses receiving dependency and indemnity compensation pay $0.
So if you have any service-connected disability rating, even 10%, the entire funding fee is waived. That alone can save you thousands. Before 2020, VA loans had county-by-county limits just like conventional mortgages. If you lived in a high-cost area, you could hit a ceiling that forced a down payment. The Blue Water Navy Vietnam Veterans Act changed everything.
Effective January 1st, 2020, if you have your full entitlement available, there is no VA loan limit. You can buy a home above any county limit with zero down payment, as long as you qualify on income and credit.
The caveat is partial entitlement. If you still have an existing VA loan or you have not fully restored your entitlement, county-conforming limits still apply. The 2026 baseline is $832,750.
Now here is the part we teased in Scene 1. Think of your VA loan entitlement like a rechargeable battery. You use it, you pay off the loan or sell the house, and the VA restores your entitlement. You can use it again.
There is no limit on how many times you can use a VA loan over your lifetime. Some veterans have used it 3, 4, even 5 times. Every time you pay off or sell, you can request a one-time restoration of entitlement.
Isabella here. Erica, the key detail is that restoration. You have to actively request it from the VA. It does not happen automatically when you sell.
And if you try to carry 2 VA loans at once, that is where partial entitlement gets complicated. Work with a VA-approved lender who understands entitlement math. Let us tackle the myths that stop veterans from using this benefit. Myth 1, you cannot buy a condo with a VA loan. Wrong. You absolutely can, as long as the condo project is on the VA-approved list.
Myth 2, sellers will not accept a VA loan offer. This was a real problem years ago, but the recent VA policy update now allows sellers to cover termite inspections and more closing costs.
The stigma is fading. I have seen multiple offers accepted with VA financing in competitive markets this year.
Myth 3, the VA loan is a one-time benefit. We just covered that. It is reusable and you can restore your entitlement every time you sell or pay off.
Now let us talk about the IRRRL. That stands for Interest Rate Reduction Refinance Loan, and it is one of the smoothest refinance products in the mortgage industry.
The IRRRL lets you refinance an existing VA loan to a lower interest rate with minimal paperwork. No appraisal required in most cases. No income verification. The funding fee is only 0.5%. The catch is you must show a net tangible benefit. That means lower payments or switching from an adjustable rate to a fixed rate.
The seasoning requirement is 210 days from your first payment and at least 6 consecutive payments. Isabella, what is the simplest way to think about this?
if your current rate is higher than what is available and you have had your V. A. Loan for at least 7 months. Call your lender and ask about the IRRRL. That is the entire decision.
If you forget everything else from today, remember this. The VA home loan is a reusable, zero down, no PMI mortgage backed by the federal government. No other product comes close.
Let us bring this home. The VA loan is not a loan from the VA. It is a guarantee that makes private lenders offer you zero down and no PMI.
Get your COE first. Shop multiple VA approved lenders and know your funding fee tier before you sit down at closing.
If you have a service-connected disability, even 10%, the funding fee is waived. That could save you thousands.
And remember, this benefit is reusable. The VA loan is not a one-and-done deal. Sell, restore, and use it again. Always verify your specific situation at va.gov or with an accredited veterans service organization. Every case is different and the rules change.
Drop in the comments. Have you used your VA loan benefit and did anyone explain the funding fee before closing? We want to hear your experience. All right, quiz time. Let's find out what's stuck. Think through each question carefully before you answer.
If this video is worth your time, a like and subscribe is worth 2 seconds of yours. We will see you in the next one.
A veteran with no service-connected disability uses their VA home loan for the first time with zero down payment. What is the funding fee percentage they will pay? The correct answer is B, 2.15% of the loan amount.
After the Blue Water Navy Vietnam Veterans Act took effect in 2020, what changed about VA loan limits for veterans with full entitlement? The correct answer is A. County loan limits were eliminated, so veterans with full entitlement can borrow any amount with zero down payment.
A veteran has an existing VA loan at 6% interest. They want to refinance using the IRRRL streamline. What is the minimum loan seasoning requirement? The correct answer is B, 210 days since the first mortgage payment and at least 6 consecutive payments.
The thing that stands out to me is how many veterans treat the VA loan like a backup option. It is not. It is the best mortgage in the country and they should be leading with it.
What I keep coming back to is the funding fee exemption. Michael, a veteran with even a 10% disability rating, saves thousands of dollars that other borrowers just accept as a cost of buying a home.
Isabella, exactly. And combining that with zero down and no PMI, the total savings over a 30-year mortgage is not small. We are talking about the price of a car or a year of college.
Next video, we are covering CHAMPFA, the healthcare program for dependents of 100% permanently and totally disabled veterans. It covers doctor visits, prescriptions, and mental health, and most qualifying families have never heard of it. That is VA Benefits 1.6. If this series is helping you understand the benefits you have earned, subscribe. We are covering every major VA benefit program so nothing gets left on the table. Quiz time, let's see what you've learned.
Stay curious, everyone.
I have to admit, River made that look easy. Solid 9 out of 10. Professor Erica, signing off.